This is the FFR Trading Market Minute. And again, this is a daily candlestick chart of the SPY. We track this week to week as a proxy for the overall U.S. stock market. And you can see I left a line here. This was our upside target at 612. And that was really the peak. I think we got as high there as 613.23 before everything just collapsed. The first target was the moving average here. And then this gap fill. So this past week, we filled this gap. I've had that line on that chart, and it came down, filled that gap on Friday. And as you can see, the RSI here was oversold. And as the tendency is when those gaps fill, it's about an 80% chance you get a bounce there. So we did get a one-day bounce there before the market collapsed, retest that level, and we've come now all the way down to this demand zone, we'll call it, because there's a little drop base rally here, and this big gap up here, you consider that a one big green candle here. So there's some potentially big buyer in here, and you can see price came right down to that level and is bounced here. We opened lower this morning but have been rallying. Now we have divergence. All right, so when this peaked lower here, you can see we obviously made a lower low in price, but the oscillator here, or the RSI, is made a higher low here. All right, that's what we call bullish divergence. Now, the RSI here is crossed back above this red line, which is its moving average. That was on this day, but that high has not been broken. So I would look, what I would look for at this point, before I would think that we're going to get any significant rally, is this high needs to get broken here, and this was the high from Wednesday. It's Thursday here as I'm recording this, so that high is going to need to get broken. Okay, if not, we'll come back down and retest this demand here. The next downside target below this zone here, we'd have to go all the way back. This is going back now to this kind of little drop base rally that happened that took out, whatever sellers that were here were taken out at that point as the market resumed that rally. So this is quite a bit of ways down here. But like I said, they're going to have to deal with this, whatever, buyers that are still in here that are trying to push the market back up here. If we break this high from Wednesday, I do anticipate that we will get back to this moving average. This is the tendency. As price gets too far away from that moving average, it tends to move back to it. Right, so we get too far away, it moves back to it. Right, get too far away on the downside, it comes back to it. Right, we get a nice move away, comes back to it. All right, so this is just a pattern that you see over kind of mean reverts, but we'll see. See if this level holds, see if this Wednesday's high breaks. If it does, I think we get up into the moving average. Now, obviously, this will continue to move down as the price is below it. All right, so, but on the downside, if this does get broken, all right, we're looking all the way down here. This is going to be around, we'll call it 548, 549 level here. Economic data set for next week, a lot of inflation numbers. So Wednesday will be the Consumer Price Index, followed by Thursday's PPI, or Producer Price Index, and finally Friday's Michigan Consumer Sentiment. Hope that helps. Have a great rest of your trading week. We'll see you back next week in the FFR Trading Market Minute.